Yes, that thumbnail is on point. I did sell out of Alibaba. Now, it wasn't because I don't believe in the company, even though after their last earnings, things are looking horrible for Alibaba. If I'm thinking 1000%, things just don't look great. I mean, after they reported earnings, the stock dropped another 11%. And it's not just because of FUD. It's factual reason why this stock fell after they reported earnings. A couple of things is, one, they missed earnings revenues on top and bottom. They missed all the revenues. They were estimated to bring in 204 billion yuan. I don't know how to say that word, yuan, and they only brought in 200 billion. So not exactly meeting expectations, to say the least. And then when you look at their earnings per share, my gosh, it was bad. They had a 38% year-over-year decline. Now they had announced that they were going to see this decline, but regardless, it's still hard to see it because it's like, ugh. And then when we go further down, then they start talking about the fact that the reason why they weren't bringing so much in revenue is because of competition. I'm like, whoa, what y'all mean competition? Like, the reason why we invest in there is because y'all got a magic, beautiful moat. What you mean competition? But they said that the CMR, which is their customer management revenue, only grew 3% year over year, which is the largest segment of growth with stores like Taobao and Tmall. Think of it like eBay stores on Alibaba. But they said that resulted from slowing market conditions and more players in the China e-commerce market. Alibaba has been facing intense competition from rival JD.com, but also newer players like Pinduoduo and even social media companies like TikTok owner ByteDance. I don't want to hear none of that. That don't sound good. Like, what do you mean increased competition is why y'all ain't making as much money? That's not what I want to hear when I'm investing in a business. And then they also talked about the fact that the other reason why earnings fell, it actually dropped about 27% year over year, is because they're investing back in the business. Now that I actually like, I don't mind hearing that you're investing in business to grow out the pie, to make more money, all that good stuff. But part of the reason why they're having more increased competition is because if you remember last year, they had to pay about a $2.8 billion fine because of anti-monopoly behaviors or anti-competitive behaviors that Alibaba had, which let's be 1,000. They had some pretty bad anti-competitive behaviors. So after this news came out, after the stock dropped another 11%, I was looking at things and I was like, you know what? I need to take advantage of this situation. And the reason why I sold out of Alibaba is because of taxes. Because your boy is trying to do some tax loss harvesting in order to reduce his taxable income. Because of this year, there's been a bunch of stuff that I've been privileged to have the opportunity to be a part of because of TikTok and a few other things. And so my tax is not going to look the same way that it's been looking all the other years. And your boy might have to come out of pocket of a few grand. And I was like, I really don't want to come out of pocket all that money. Like, that's a lot of money that I am not looking to come out of pocket with. And so using Alibaba, I can basically just kind of wipe the slate clean and eliminate a good portion of that taxable income. And then I can use my W-2 tax returns to balance the whole thing out. So that way I don't have to come out of pocket to pay for anything. The opportunity that presented itself with Alibaba just continuing to decline, I was like, why not use this to my advantage? A short-term situation that I can use to my advantage. The only risk that I face is if all of a sudden Alibaba just takes off, which I highly doubt that it's going to do that anytime soon. The story around Alibaba is so negative that there's just no way that this stock is just going to all of a sudden start taking off before I have to buy back into the stock. So that's what I'm doing. That's why I sold out of Alibaba. And yeah, so that's where we are right now. So with the proceeds that I sold out of Alibaba, because your boy has got a trigger finger and this is why I don't have cash just sitting around. But your boy got a trigger finger and I was like, you know what? This is the perfect opportunity for me to learn how to trade options. Famous last words, right? But I decided I'm going to buy some options. Actually, I only bought one option. And the option I wanted to buy was in Lucid Motors. No, it's not a call option. It's a put option. Remember, options come in two flavors. You have the right or the obligation to either buy or sell 100 shares of a company. You have put options, which is where you think that the price is going to go down, and you have call options where you think the price is going to go up. So what I did is I bought put options in Lucid Motors because I'm looking at this stock. And I'm just like, this is ridiculous. There's no way that this company should be worth what it is right now. And so I was like, you know what? I'm going to take a swing at it. So I bought a put option that was worth about $1.61. There it is. But I bought it for $1.61, which is $161 per contract. And now it's only worth $68. But the bet is that if the stock falls below $40, which is my option right here, if the stock falls below $40, then I will make money. That's how I'll make my money on this option call. But if it stays above $40, then I'm not going to make any money on this option. The bet basically is that Lucid is overvalued and eventually it has to come back to earth. But this is the problem with options. There are two times you got to be right when it comes to options. One, you got to be right that the company is overvalued or undervalued, whichever way that you're placing your bet. And then two, you have to be right about the time frame in which that happens. This was a 1 month option, and even though I may be right eventually, might not happen within the 1 month, which means that this option contract is probably going to expire worthless, which means I basically just threw away $161, which kind of sucks. If I'm being 1,000%, it kind of sucks, but hey, this is how I learn things. Right now, like I said, it's worth half what it is that I actually paid when I bought the initial option contract, but we'll see how that plays out. It's not looking good. As far as where the portfolio sits right now, it sits at $3,154, with about half of that being in cash. About $1,500 of that is just sitting in cash, waiting for the opportunity for me to buy back into Alibaba, which will be in about 2 weeks or 2 or 3 weeks when I can finally buy back into Alibaba once again. And for other news within the portfolio, got a nice dividend that came in from Ally Financial, which is wonderful, about $2.45. And also I'm going to be getting a nice little Christmas present, about 60 cents from Microsoft. So I don't mind. It's good to get presents as dividends from the companies that I own. But anyway, that's all I got for y'all in this video. I hope y'all learned one, maybe two things out of this entire thing. And if you did, hit that like button. If you loved it, hit the subscribe button. But I'm gonna catch y'all up on the next one. Remember, generosity is always greater than greed. God bless each and every single one of y'all. And your boy is out of here. Peace.